both parties after the election have an interest now to come up with a fiscal package to support the U.S. economy in the time of a continued sort of deterioration of coronavirus cases. So we do expect some fiscal stimulus from even a split Congress, but a milder or smaller one. Lower fiscal stimulus means also that the Fed is going to need to step in a little longer, maintaining interest rates lower and potentially increasing their quantitative easing at the December meeting. So that means lower rates even for longer, so it means a bit flatter curve. That has also some positive impact to risky asset, positive impact for credit spreads and interest-sensitive sectors. The other important element are on a regulation front for big tech. It probably means less risk of pursuing a breakup of big techs or having strong regulation against big tech. So that's been positive for the tech sector. And the last piece that's also given those results is we're not going to have or very low chances of tax hike, corporate tax hike. The impact will be more at the international front. We think that a Biden administration will be a bit more inclusive in terms of trade negotiation, less aggressive towards China, still disputes, but probably less use of tariffs, intervention, and a more cooperative environment. That is positive for global equities in general, non-US equity in general, and particularly for Asia and China, which have already also have an ace in their pocket, having managed the coronavirus pandemic better than other regions. So a continued outperformance of Asian assets would be likely, and we would continue to tilt in that direction, our strategy. Climate change, energy changes will take longer to be implemented. So from that perspective, it delays these types of policies. From a currency perspective, the main implication is with the Fed increasing and having to step in as fiscal spending will be lower than originally expected, that translates into likely a weaker U.S. dollar. And from a broad perspective, as the U.S. continues to deal with lower fiscal spending and continued impact from the pandemic. On the reverse side, from a Canadian dollar perspective, then part of the strength of the Canadian dollar will be from US dollar weakness. And over time, with a continued economic expansion, we continue to think that Canadian dollar will outperform the US dollar at a moderate level. Will there be continued delayed into the official results? Most probably. There's already been a legal dispute being implemented by the Trump administration. We don't think, though, over time that will result in a very different result for the final election results. So from that perspective, that is not something that we see as a major impediment for investors at this stage of the game.